Welcome to the final day of Emkay Confluence, Unleashing India's Potential. We kickstart the day with a very interesting panel on growth and resilience of MFI sector and the outlook ahead. MFI is a backbone of rural finance, driving financial inclusion in remote areas of India and bridging the gap of financial underpenetration that the country faces. Over the years, the industry has scaled up to an AUM of around 3.5 trillion and including the SSG to an AUM of more than 5 trillion and thus surviving and thriving through multiple crises. With favorable regulation and underlying strong demand, the sector is poised to enter a strong growth phase and has a very strong outlook ahead. That said, this phase also too will have opportunities and challenges. To discuss the same and the roadmap for the MFI sector, we have a very interesting panel today. I would like to call upon stage Anand, who will be moderating the panel, and of course, our eminent guest. To start off with, I'll start with Dr. Alok Misra, who is the CEO of MFIN, which is Association of MFI Institutions of India, and also SRA, responsible for liaising with regulators and MFI players. Dr. Misra. He has nearly 30 years of experience in rural finance, microfinance, inclusive finance, and research both at policy and implementation level. He's previously served at VIA FinServ and NABARD. Welcome, sir. Next, we have Mr. Udaya Hebbar, who's MD of Credit Access Grameen Bank. It's again one of the most successful and largest NBFC, with an AUM of around 210 billion and dominance in South India. Sir? Mr. Hebbar has been an architect behind CA Grameen's transformation journey. Lastly on stage, I would like to invite Mr. Devesh Sachdev. He's the founder cum CEO of Fusion Microfinance. Welcome, sir. Under his leadership, Fusion has grown into one of the leading MFIs in North India with an overall AUM of around 97 billion. Anand will be leading the show now. He'll be moderating the session. After that, we'll be opening the session to Q&A as well. Thank you, guys.
And warm welcome to the MFI panel over here. We recently released a detailed microfinance report highlighting the growth journey and the challenges during the growth phase 1 and 2.0. We believe that we've already entered the growth phase 3.0 beginning the last year, FY23, and we have seen a very strong growth in the microfinance sector. So we have started with a big bang, but as we have seen in the past cycles, every growth phase has its own challenges and opportunities to deal with. When we speak to the investors, most of the investors have their concerns in the mind, as we were discussing that, in the growth phase, basically what could go wrong and when. But then rather than only discussing about what could go wrong and when, how do we mitigate this risk? How to meet these challenges and ensure that the investors' confidence does remain in the sector and they remain engaged in the sector. In the first round, first I would like to ask Alok, sir. Sir, what kind of growth do you expect over the next decade in the microfinance sector? And the role of an SRO is basically to anchor the growth. We have seen in the earlier crisis also, liquidity was the biggest challenge that a lot of microfinance, the small MFIs actually faced. Being an SRO, what is the role that you feel that you will play actually to ensure that there is abundant liquidity, even basically when we have a crisis? As far as the banks are concerned, they have the support of the RBI. They have the repo window opened up for them. But for the microfinance sector particularly, there have been issues in the past. Over to you, sir.
Yeah, thanks, Anand. I will take your first question first, and that is about what would be the size and growth and all that. As I keep telling, that every year we release a report, annual report, which is called as Micro Matters Macro View. And in last year's report, it is available on our website, mfinindia.org. We had tried to estimate what is the market size for our microfinance after the new regulations came in. And the market size as of date was assessed to be somewhere around 17 lakh crores. As against that, the institutions have reached 3.5 lakh crores or 3.5 trillion, that is what you said. So there is enough scope for growth. And I think that is also because one of the primary reasons why there is resilience of the sector, because there is huge credit demand, there is huge section of the population, 70-75%, which is excluded from the banking system, traditional policy driver of the government. So there is a lot of credit demand and people appreciate that. So enough scope for growth is there. Now to your second question, you talked about in crisis, what will we do and as an SRO and or as an advocacy organization so that there is no liquidity issue. So first of all, let me start by saying that as an SRO, as an association, when all the players are with us, our first task is not to allow anything which turns into a risk on our own making. So this is the first challenge. And that we will do by enforcing regulation, by ensuring that everybody plays by the book, everybody plays by the code of conduct which the industry had decided and which everybody's board has also signed on. And now that the MFIN has broadened its scope to include in membership, earlier they were associate members, now equal members, is banks, SFBs, NBFCs, anybody who has a retail microfinance portfolio. So the idea behind it is to keep the sector robust and healthy and sustainable through implementation of guidelines. But even then, if we keep the internal all in order, everything is in sanity, but even if something can happen, like what happened in COVID, what happened in demonetization, that was not the making of the institutions or their practice. While in AP, it is a mix of factors, 3 major crises in 10 years, AP crisis, demonetization, and then the COVID crisis. So AP crisis, mix of factors. Internal also there were some issues. In demonetization, all external. COVID, all external, everywhere global. So in such situations, even if it happens, you talked about liquidity. The last incident of COVID, where there was a liquidity crisis because of we had to give moratorium, while the funders did not give the equal moratorium. In that case, in our policy advocacy and even our recognition at the central bank's level, the Reserve Bank of India gave 25,000 crores of refinance window, both with NABARD and SIDBI. And the liquidity increase was, and then the government came in with credit guarantee scheme of 7,500 crores, which was utilized within 45 days. So there is enough policy recognition within the government and policy that in case something worst happens due to external situations, liquidity will be provided.
Great, sir. So second question is to Udaya, sir. So what kind of growth that CREDAG basically envisages over next 5 to 10 years, number one? What could be the broad drivers of that growth? We have seen microfinance has been the leading growth driver for you. But now that you want to diversify into many other segments as well. So what is your view in terms of growth in those segments? And the another aspect is that you are very strong in the southern India, particularly in the state of Karnataka, Tamil Nadu and all. AP and Telangana has now opened up. In the past, as Alok sir said, there are lessons to be learned for the MFI players, as well as there were exogenous factors as to deal with. So this time around, everybody wants to get into AP and Telangana. So what will be your strategy to get into that state? And what are the do's and don'ts that you feel basically one should typically have, particularly in the state of AP and Telangana, which had its own crisis in the past?
Sure. Thank you, Anand. Nice to be here. On the growth perspective, I think, Credit Suisse Grameen laid it out clearly. On May 18th, we had an analyst discussion on the day. What we said is, 4 to 5 years, we should be able to reach 50,000 crores of portfolio, which is on a CAGR of 20-25% of the growth, which probably is in line with the industry growth, what Alok said, same way, and then maintaining our market share of 6.5%. So we expect the industry to reach about 8.5 lakh crore by that time. So probably we will go reach 50,000 crores, but which will be 20-25% of the CAGR, whereas it will be a mix of microfinance and non-microfinance. As we started the pilot of two-wheeler, individual business loan, LAP, or affordable housing, which we are planning, all these together will have a ability to reach between 10 to 15% by that time. and the microfinance will remain at 85 to 90% kind of thing. That means our 25% overall growth, whereas microfinance might come down a little bit in terms of growth from 25 to 24, 23, 22 kind of thing, whereas the balance will be non-microfinance book. So that, but overall, we still will be able to grow around 25% CAGR, which is what we envisage. Where when it's again, when you talk about the non-microfinance, this is the nature of Grameen with following our customers. So if you look at all the products are designed to support the customers' aspirations. So if you go back and check their aspirations, aspirations to enhance the income generation, and improve their home, build assets. So any customer who are more than 3 to 4 years in system, they can actually access this additional funding and then go and enhance their income generation business, or buy two-wheeler, or build houses, or business enhancement. So basically, we will follow our customers who are called graduated or experienced. We will get this facility. So if you look at the data point, even if you are able to convert between 7 to 8% of our own customers, we will be able to achieve that 10 to 15% of our non-microfinance book. So the road is clear. We set out our strategy in terms of the products, processes, technology, the controls, audit, and funding. All those things we set out strategy very clearly for next 5 years. So any one of you, if you have some time, please check on our website where we actually uploaded this presentation, which is full all strategy in terms of the business and all other pillars, which we set out clearly and and completely available there. So next question is
Sir,
AP in
about
Telangana.
yeah, AP in Telangana.
I know AP and Telangana had problem in 2010. So I joined the microfinance industry at the middle of that crisis. Therefore, I witnessed that from end to end actually. Well, I know that was a crisis which is recognized always as a problem for microfinance, and always we thought that state risk as in our mind started from that point. But actually, the state risk was actually ended also with that point. So basically, the whole unregulated microfinance getting started regulated by regulator from that point. So therefore, the state risk actually vanished from that point of time. So because regulator, there is a regulation. But it's 13 years over. We don't see the same issue in Andhra or Telangana today. Therefore, and regulation is clear, and many court decisions are in favor of NBFCs or regulated entities. The courts are clearly telling that state governments cannot control RBI governed microfinance or NBFCs, so which is decided recently again in the case where MFIN has been battling for last 13 years, so which is already decided. So I think this is a good market, definitely. The southern market normally is quite good for microfinance, which is quite women empowered, quite small businesses. I think AP Telangana is a good market. So if you look at our plan, we always expanded by a contiguous district basis. So therefore, we would start our operations on the contiguous districts of Karnataka or Tamil Nadu or Maharashtra, which is towards AP and Telangana. So therefore, we would not change our the process of expansion. So we will start that this year. So contiguous districts or border districts we will start operating this year. So maybe Q2 and Q3 will start opening the branches, and we'll see how this progresses and then go to next year. So that's the process we followed, which validated our expansion so far in our journey. I think we will continue the same process going forward. Thank you.
Sir, link question is that you said that you also want to enter into the non-microfinance system, lending business. Now, question is that if a microfinance customer who is a vintage customer obviously has a higher outstanding with him, and add to that, basically, we give a two-wheeler loan or any other kind of loan, again, to same customer as such. Will that create a risk of over-leveraging at that customer? How do you assess that, and how do you manage that kind of a risk?
Okay, it's a good question. Actually, when we do these businesses, we would be identifying only those who have income more than 3 lakh. So not less than 3 lakh. If they're in less than 3 lakh, they'll still be in microfinance only. So we identify them. If they have a revenue income more than 3 lakh, their ability to service this loan, then only they move there. Not necessary. If we start converting everybody, I can convert 50% of my customers. They are more than 3 years. But we are targeting only 7-8% of them actually. So ideally, those who are beyond microfinance, we are getting into non-microfinance. That is one. Second is, they have serviced, they have borrowed and serviced to you over 3 to 4, 5 years to us. And then they would have borrowed in the process 2, 3, 4 lakhs in the last 3, 4 years and then paid back promptly. So we are choosing only them. Okay, now, next is they are getting into and then we are also checking their income side. If the income is proper, they have a multiple source of income, they have assets, they have a housing. If they borrow more than 2 lakh, we will ask for security. Then basically we are moving the unsecured business to a secured business for the same customer who has served us for 5 years or 4 years. Correct? I think we are only strengthening the portfolio going forward. From our point of view, it is actually strengthening. Unsecured moving into secured actually. So therefore, we don't see any risk in this.
Interesting. My next question is to Devesh, sir. Sir, Fusion has been clocking very strong growth all along. So what is basically the kind of growth that we are looking at over next 4 to 5 years? Your strategy, when we look at across the microfinance players, has been that you have been focusing a lot on the customer growth. The areas that basically you operate into obviously are the areas where there is huge growth, particularly in terms of customers, the states of UP, and so on. So what would be the strategy that you're looking at over next 4, 5 years? What kind of growth that you're looking at over there? The another question, the way, he's been there in southern India and AP and Telangana is a big opportunity. For us, we have a strong foothold in UP. So what kind of opportunity that you see over there? Similarly, Bihar, if you look at, has one of the highest GLP in the microfinance industry at somewhere about 500 odd billion. And we look at penetration, the MFIN data suggests that it has one of the highest penetration in that state. We believe November 2025 is when there is going to be an election, and hopefully this time around it's going to be a slugfest over there, particularly in terms of the, taking over the power. So what is the strategy that you will adopt? Because we see there is going to be a big political risk ahead, which is going to come. It's a very big state. From your perspective, as well as from the microfinance industry perspective. So what is your view over there, sir?
Yeah, so many questions. You have to remind me all the questions.
Yeah.
So there are 4, 5 questions. So, good morning. Thank you for having me here. So I think I will start by giving a very small comment on. And this question comes again and again that, microfinance, there's some cyclic in nature, some crisis always comes in. Other point is that how big the sector could be. So on the point on how big, I remember, when we started, when we used to go to conference, sab bolte the ki 50,000 crore is like, there's nothing beyond 50,000 crore. Oh no, 1 lakh crore, oh, it's too big. And then the goalpost started changing. It was 2 lakh, we are now, right now, close to 4 lakh crore. So that is my first point on the growth. The second point on as Dr. Alok was talking about, there are 3 big crises. One crisis when it came, there was no regulation. There was very cursory mention of microfinance in the RBI regulation. Nobody knew, there is such asset class, there's certain kind of work which is happening. The understanding of microfinance, whether in the government, whether in the local bureaucracy, customer level. I mean, I remember even till 2015-16, we were actually camouflaged with chit funds. I remember going into, after DMON, going into MP in meeting some district magistrate, and he was saying, no, वहाँ पर there is a group होता है, वो लगता है पैसे लेके चले जाएंगे. मैंने कहा नहीं सर, पैसे ले नहीं रहे, पैसे दे रहे हैं. You understand what I'm saying? So I think a lot of water has flown under the bridge. So my point is that last 2 crises, let's not ascribe it to microfinance. I always say that DMON and particularly COVID are 2 crises which were, for asset class like microfinance, customer is so vulnerable from a bottom of the pyramid, huge, it's a micro retail kind of asset class. And in spite of that, between me and Udaya, we are sitting here talking to you. I think we've already passed the test. So I don't think the question about the survival or resilience of microfinance should be there. I mean, we have seen 2 years of COVID here, more than 2.5 years of COVID, and we are sitting here. So that's my initial comment on those two things. Sorry, I wanted to add what Dr. Alok said. Now coming back to, I'll first like to address this question of Bihar. I'll start from there. Look, I think one, I don't know, what kind of, so I will put this question, sorry, Anand, to you, that, so you tell me, in which state, how much portfolio should we build?
I don't think so. There is a size that one can ascribe
So
to,
that's
but yeah.
So that's the point I'm trying to try. I think if you look at the Bihar economy, if we look at the standalone economy, suddenly say, oh, 49,000 crore is the GLP right now, it's too big. But have we added domestic remittance? There is a data that from NCR, only NCR, total domestic remittance, 40% goes to Bihar. Another 35% goes to UP. These two states has the most this thing. I'll give you a very first-hand kind of data points. You ask any carpenter, any taxi driver, anybody who is from Bihar, and ask only one question: how much they send to their house every month? I can tell you, it is, in my view, I mean, I'm telling you first-hand, average of 15,000 rupees per month. This is only one source. And then whatever they are earning there, other multiple sources. So that's the point on, so we have to look at the Bihar from these two aspects, only looking at, local economy and the livelihood there. You have to also add the domestic remittance. That's the other point on Bihar. Second, it is, what is the total population? I think population is around 12, 13 crore, 14 crore of population. So at you're talking about, I think 3 to 4 crore households. So how many households? We have raised around 1 crore household, one unique, 1.1 is the unique today. And you see, I mean, and also look at the ticket sizes. I mean, overall disbursement size is still hovering between 43,000 across the sector. So I don't see that, one should, and we are on the ground, we don't see any such kind of risk as far as Bihar is concerned. But I take your point that one has to be calibrated, one has to always keep these things in mind. And as you rightly mentioned, like coming to the second point, that's why, if you look at Fusion, we have more focused over the years. So our strategy has been into, the first phase of strategy is now more or less over. The first stage of our strategy was that we want to diversify because, when I started in 2010-11, I could see that there were many companies who were actually struggling to come out of a particular state because the DNA of the organization was like that. It's a low-hanging fruit. So we said, no, let's diversify it. So we have now shops in we are present now 20 states. We are well diversified. Also, because the sector has gone through some of these crises of demonetization and COVID, we were very cognizant of the fact that we will add customers more, take this opportunity to add more customer rather than, increase the ticket size. So that has been our strategy, but now I think that phase 2 will start, where we will more consolidate. We will open, more branches in the areas where we are present. And then, overall, the ticket size will also, we will recalibrate, like I mentioned in an analyst call, that, we had not increased our first loan size for quite some time. We've done 5-6 months back only. So I think that's where, and coming to the growth, I think what we have said is that we will be very calibrated. We are, whatever the sector is growing, we will try to be at least closer or at least more than what the sector growth is. And as Udaya was mentioning, we have started this pilot of MSME in 2019. We have strategically put up our MSME branches in where we are very strong as MFI. These are all standalone branches, and we are running a very huge project of convergence where any microfinance customer, which is more than 3 cycle with us, has the ability to take large loan, has cash flows, has security. That customer is getting converged through a digital network to our MSME, because our MFI field level, the field officer does not have the capability to do a real cash flow assessment, and that's where that role comes in. So yes, we will also build in a manner where we'll look at adjacencies, customers' aspiration, but I think we are right now very focused. We are very focused as a core company. Rather than doing 2-3 products, I think we will focus more on these 2 products, microfinance and MSME in the adjacent, and that's how we want to grow. I hope I've answered all the points.
So basically that's about the product diversification. And I think in terms of the geographic diversification, you will look at Southern India and other
we already now, if you see Tamil Nadu is already a top 5 state now, one of the top 5 states. We entered Karnataka. Andhra and Telangana, as you know, Udaya was saying, it's very right. A lot of water has flown over the bridge over the last 12-13 years. Our strategy, if you see, has been very clear. Whenever we enter a state, we enter very slow. I'll give you a very simple example. We entered Bengal 2015-16, and till last month, we had 15 branches only. Till the time my risk gives a go-ahead, will not grow. So similar approach will be followed. We will open around 12, 13, 14 branches in each state. Wait, understand the geography, understand the nuances, understand the overall customer, and then, once we see at least 8 to 10, 12 months of cycle there, understanding, I think Telangana elections are also there in November, that will be over, it's very near. So that's how we were, and that's how our strategy, we're not going to change our strategy. This is how we do in every state.
Great, sir. In the second round, my question to Alok, sir, and this is again common for the others as well. So if you look at the climatic risk, is a very big risk that we are seeing going forward. So in our report also, basically we have done an analysis where we have suggested that in last 3 to 4 years, there have been about 3 cyclones in the Arabian Sea. Otherwise, basically Bay of Bengal was the sea where basically most of the cyclones would originate. So then we have risk on the east coast, we have risk now even on the west coast, the last being Biparjoy. As an SRO, what are the measures that you would suggest basically, because the climatic risk is a holistic risk. It's not restricted mainly to one MFI or so. Being an SRO, what is that you would recommend? How do you mitigate this risk? And what are basically advices to the microfinance companies?
No, yeah. See, climate risk affecting our clients. Though the irony is that our clients don't contribute to climate change, but they are the worst sufferers in case of climate change. Whether it is a flood or it is a drought, because believe it or not, 70% of population or 70% of clientele of microfinance has some linkage with the agriculture and allied sectors, and if there is a problem, it happens. So, and we have been dealing with that in past, but recent events as we are seeing right now, you are seeing in Himachal Pradesh what is happening, in North India what happened this summer. So these events are likely to get more extreme, more intense. So not as an SRO, but we are the head of policy development and advocacy, how to protect that. So we have been working on a project, so we are trying to look at it from 2 sides. Basically, we are concerned about sustaining clients' livelihood. So, and second thing is ensuring that clients' payments don't get into bad loans because the client's livelihood has been lost. And you cannot force a client to pay when the livelihood is not there. So we are basically adopting 2 strategies. One, we have been working for last 3-4 years with the help of Asian Development Bank, ADB, on developing a natural calamity index-based insurance. So its pilot has been completed last year. This year, once the ADA's approval comes in, we will be launching the full-scale implementation of that in 4 states to begin with. In that case, with a nominal premium, say 200 rupees, the client can ensure that in case based on what you can say satellite-based observation, if precipitation level goes above X or there is a drought condition and all that, automatically for 3 installments, the insurance cover will pay for you. So that is one aspect we are trying to. And second is, there can be other events, maybe not everything will be covered or maybe some client will not take. To guard the sector against that, now we are working with trying to, after this only, once I finish this, we go there. We have a meeting, we are working out options on guarantee cover with both CGTMSE and NCGTC. So in case some extreme events happened, even if the client default, the portfolio quality can be saved. So we're working on a multi-pronged strategy. And along with that, the third pillar of that, which from this year onwards you will be starting, is one is that we now understand that we have to focus and sensitize our clients also, though their contribution to climate change is minimal, on the sustainable development goals and other aspects. Our annual report for this year is focused on that theme. From this year, we are working on a project to capture that what our institutions are doing on the ESG front, on SDG front, and trying to see that climate-friendly policies are even adopted at the micro level. So it is a three-pillared approach.
Sure. Same question to Udaya sir. How do you look at basically mitigating this risk? There are a lot of advanced data analytics which are now available to predict the patterns of, possibly the cyclones, the floods, possibly which would come. How do you mitigate that risk at the district level, at the branch level?
Yeah, I think all those three steps, what Alok said, is applicable to all of us actually, whether it is Fusion or me or all MFIs. Top of that, it's an internal policy of the company that we will be complying on all the ESG related compliances. We are already compliant in that. Top of that, we also the products, the home improvement loans, so that customer can build the resilient homes and then repair their homes whenever there's a need. Our own product itself is more of income generation loans, which actually a resiliency against any events what they follow. And then top of that, the customer education. So one is resiliency, education is most important. When we say this whole population are at risk, but they don't know that the risk is coming to them. They don't have any idea about what is this climate risk coming and hitting them. I think that's customer education is most important here, that this is changing, weather pattern is changing. You need to change the sowing pattern. You need to change the agriculture, what you sow. You look at, some years back, the rain was starting around June first week. Now it's actually moved to July first week. So, and it's going all the way up to November. So the sowing season is changing, but many farmers or the customers still may be sowing in June and waiting. And an impact of this whole weather change, they don't have any awareness actually. So we have a project called Jagrati, which is awareness building to clients. So where we create small videos, small training chapters to keep communicating them. These are changing. So one of the key topic is the weather change and climatic risk, how to mitigate themselves. That is one. And obviously participating in this kind of NatCat insurances. And one more thing is hospitalization protection is one more thing. So customers may not be aware of or are not able to manage the cashless health insurance. It's difficult for them. So therefore, industry developed with the insurers something called HospiCash. HospiCash is nothing but if customers, family members admitted to hospital for X number of days, for that number of days they may not have earned income, so income is reimbursed. So up to 30 days of income is covered. So that it also counters the risk of hospitalization, whether due to weather impact or something, because weather change is linked to health impact. So that again one more mitigation we are doing. And internally also we do realize that this is very important. Therefore not only weather, also the how to mitigate other SDG impacts like carbon emissions reductions. How to counter and mitigate that. So we took gender diversification again, as a part of the ESG. There also we are working together. So top of these three, what we're doing, the education is most important, what is that we are doing. And the product diversification for medical emergency loans, education loans, family welfare loans, like home repair loans. All these are linked back to mitigating such risks.
Sure. So Devesh sir, same question to you, but I just wanted to touch upon the provisioning. So provisioning buffers. We've seen the large banks do maintain higher provisioning buffers. When we ask them basically why you're building this buffer, they're saying that we're just building it for uncertain times, and they keep building it. So ICICI Bank has 1.25% or so. Our industry has been prone to so many risks as such, and we've seen the support which typically comes from regulator does come at times pretty late. So what is your view on building the provisioning buffers at the individual microfinance company levels and as an SRO, sir, basically, do you think that something can be done even at the SRO level, at the association level, to build some kind of buffers, basically which can be used at the time of crisis?
First, you want to answer?
Yeah.
Okay. So I have nothing to add, I think, on the climate change. He has already talked about at a sector level what are the things we are trying to do. And as Udaya was saying that, yes, I'll tell you in our case, like Bihar, every year there is a flood. And we manage it. I mean, we are, so it's all about client awareness, telling the customers that, okay, that period is coming in, they should be ready. Also, we have a very strong CSR network, program which gets activated. But yes, there has been now in North India, first time after many years, a sudden, climate change and all these floods which have come in. So it's all about awareness and, helping the customer, giving the customer time and all that. The customers come back, and we also have all kind of other support we provide. So coming back to, I think, the buffers, I think in the sector, we are the first company to build buffers. So right now we carry around 0.8% of our buffers. So idea was this only, because I remember when I was doing the IPO roadshow, so a lot of people were asking that this sector goes through a cycle. So when I asked them, okay, आप इसका रेमेडी देखिए प्रॉब्लम है आपके माइंड में बट आप उसका तरीका बताइए क्या कर सकते हैं सो वन वे इज दैट एवरीबडी सेड वन वे इज दैट व्हाई डोंट यू स्टार्ट why do you have to give a certain level of ROA? Why don't you give a more consistent ROA and build buffers? And that's what we have been doing. So the idea is that yes, we already are now carrying around 58 crore of buffer on our and good quarters. We are building those buffers, adding to those buffers. In tomorrow, if suppose auditor has some issue, we can change our LGD staging this thing and do that. So I think this is a good thing. And if we build buffers, it gives a lot of comfort that to a certain extent the balance sheet is insulated for any such, and you can always dig into these buffers in the crisis like this, as you mentioned now, sudden floods and everything. So I think it's a good practice followed by HDFC and even I see Bajaj also carries that. So yeah, I think we are all doing it. So I have nothing else to say on this.
Alok sir, you want to add on the provisioning buffers and so on?
Well, provisioning buffers, see, in our cases, in case of NBFC MFIs, all the large ones like those sitting on my right and left, they are under different system of accounting compared to banks. So in case of banks, the conversion of risk and its adequate provisioning continues to be based on IRAC norms. There is a talk of moving towards ECL, but still not. So here there is already aggressive provisioning. Plus UPC, I think in top players, the net NPA would be 0.5, 0.75, 1. So already there is provision. And on top of that, to build another buffer, in case of banks, I understand. Because one, it is the requirement of Basel norms that you have to have a counter-cyclical buffer. The second is that the provisioning also has not moved to the advanced provisioning, which the NBFC MFIs follow, that is ECL. But even in that case, I don't see, if I would be running an institution, I would say my current level of provisioning is adequate. Maybe a little bit I will provide extra, but it depends on management's approach, that if they want to provide for it and keep it there, that's their choice. But even the current level without extra buffer, I think is quite adequate, because when you look at risk, risk modeling is always based on past events. No? So, and you cannot model it based on 2 years or 3 years. No? It has to be 10 years, 5 years, minimum 5 years. If you look at that, if I start from 11 to 23, it is 12-year period. If you model the entire credit risk of the sector, it won't cross 1.5 or 1.7. And that much buffer is already there.
Sure. Yeah.
One more thing. I think you also have to see that most of the companies are maintaining a very healthy capital adequacy. Even though capital adequacy is 15%, like in our case, we have given a very clear guidance that we would always like to maintain 20%. And there's a history of Fusion. If you see 13 years, Fusion has never gone less than 20% capital adequacy. So that is also good. So you are building extra capital adequacy. Second is the cash which we carry, on the balance sheet. So you see most of the companies carry at least 2.5 months of, cash on the balance sheet. So I think these are enough, and actually all you see extra capital adequacy, all these are eating your profits. So I think these are already good practices which most of the good companies are following.
I just want to add on the buffer actually. Yes, banks some of them are doing it because they're in Iraq and Basel norms asking them to do something. But when you go to ECL, it is already an expected credit loss. The whole definition is that your accounting standard defined what is expected credit loss. And unexpected is that when you have an event in front of you, you need to build that. If you build a buffer extraordinary, it's questionable from the accounting standard also. We discussed this. So you remember before we all moved to Ind AS, so we are supposed to provide 1% by regulation, 1% of the book, standard asset. And then the balance on the NPA, 50%, 100%, like that. So at that time, Grameen used to, create 2% buffer. So we were already, in a position of trying to create higher provision, identify the risk in advance. But when we moved to Ind AS, there was a clear no that you can't create an additional buffer other than the ECL. That's where we thought, in microfinance, let us build in such a way that, we recognize early also, we will have continuous different buffer also. Therefore, we treated any PAR more than 15 days as stage 2. So created provision of more than 50% for that. And also we declared NPA as 60 days and then provided based on the ECL about 75% or so. So that in the process, we built inbuilt buffer in our whole ECL mechanism, so it's available all the time. So one is recognize early, two, build buffer. So actually you have inherent buffer in our book, probably that's something unique what we built actually. So we are able to maintain in the last 5 years, particularly in this model. If you look at Grameen's net or PAR 90 is 0.7%, whereas ECL is at 1.59%. Because of this process, almost 80 bips, you have excess buffer we are able to build as compared to Iraq now. So it is inbuilt within the accounting standards. That's what we try to build. So that we don't have to, if there is an event we are forthcoming, you can always work on an additional buffer. If no, it's a normal process, there is almost 80 bips additional buffer we created, which is a normal accounting practice. So thank you. Just thought to clarify.
Yeah, sure, sir. That's great to hear. Now we'll open up the floor for Q&A from the audience. So if you have a question, yeah, please raise a hand. Yeah, Sanjay sir. So take the mic, please.
Yeah, I want to congratulate both of you. I mean, really managed growth and asset quality very, very well across cycles. So the question is, you both seen cycles and problems. So one is the ability and second is the intention. So at times the ability gets jeopardized and then sometimes politicians come in and then it leads to intentional defaults because they accentuate it. How do you see this? I mean, most of the write-offs you do, are there actual problems of ability or the willingness also gets jeopardized?
I think maybe I'll take this first actually, because if you look at microfinance, and at least I can vouch for last 13 years. I'm in this business actually. Except AP episode, which just started, where it was confined to AP and the losses, everything in AP only. If you look at the intention of the customer, always good. We never doubted the intention of the customer. Normally, they get carried away with some influences sometimes. But even with that, except 16 demonetization, there's a disability of the customers to manage their cash flow, so they lost the businesses. And again, in COVID wave 1 and wave 2, your PAR or NPA is more than 2% in the industry. Otherwise, all these 13 years, there is no event which has actually lost more than 2% for the industry. So which is still within the range of so whether it is intention issue, whether it's some pockets of issues, there may be some pockets of issues, but still we never seen more than this. You look at only Grameen point of view. We disbursed 85,000 crores in the last 11 years. Okay, what we lost is 2,000 crores. Of that, 1,870, whatever, 2,000 crores. Of that, 80% is either demand or COVID. Balance is just 0.5% across 11 years. So this is actually, this actually shows the resiliency of these customers. It is not intentional. It is basically sometimes circumstances make them to pay, or sometimes they get carried away. Sometimes it get influenced by somebody. But still, it is insignificant in terms of the overall picture. So just thought to highlight these numbers to you.
So, Sanjay, I will not, they has covered it very well. So, I will just say one thing, that more from the customer behavior. What you are saying is right, that there was a time till 2015-16 till debond where people actually, we were speaking on the sidelines also, that there was no differentiation between microfinance and jet fund. There was no differentiation between, when the waivers were announced, people thought, it is for everything. But after that, people have realized, one, because of a lot of work which at a sector level MFIN has done, individual companies have done, a lot of customer awareness we have done. Now, customer actually understands that when the waivers are announced by the state government or this thing, microfinance is not covered. Second, overall, there is as Udaya was saying, there are similar numbers I can mention about Fusion. There is at a bottom of the pyramid, there is a consciousness now that they want to maintain their credit record. This credit bureau, one thing which I must say that one big highlight, and today wherever the sector is, there are many factors, but one very critical factor is the credit bureau, the evolution of credit bureau. I don't know whether many of people, know it or not, the credit bureau submission in cases like us is daily. In banks, it is after 45 days. So I don't know whether people know. We submit data to credit bureau on a daily basis. So the point, again, I'm trying to drive here is, Sachdev, is the fact that it is now customer understands, they have to make their record clean. I can give you a simple example, like, we have, both of us have done some write-off because in COVID, but look, we keep on collecting money today. People are coming and trying to pay back because वो customer फिर से गई, उसके बेटे को loan नहीं मिल रहा है, education loan नहीं मिल रहा है. So overall credit, I know it's a process, it's a new asset class, but you have to appreciate at that customer awareness is going up and they want to really maintain their credit record. So that is also playing a very important role.
The credit protect that is, plugged in with the disbursements. So does it cover these calamities?
No, sorry. It is only, credit shield is only for death. In the case of borrower and her husband. Only for that. Yeah.
Yeah, next, Nikhil. Yeah, go ahead.
So there is always some or the other learning from any event or cycle which happens, and we improve our processes post that. So customers are also becoming aware about their credit scores and bureaus. What I believe is, whenever there is improvement in process and customers are becoming more and more aware, the credit cost actually should come down. But looking at the guidance being given by most of the MFI players, whenever there is an event, we see credit cost guidance on a sustainable basis to increase. Earlier it used to be 0.5 to 0.7, then 1 to 1.2, and now 1.5 to 1.7. So despite learning both at the company and customer level, why is credit cost guidance going up?
Yeah, I'll give the answer to some extent. While customers are quite aware about the bureau, point one, And again, they are actually intention not to default. But I also said sometimes they get carried away, correct? Because their financial literacy or education is not as high as us. Sometimes they get carried away by the nature of their own, I can use, for lack of word, I can use herd mentality. Okay. So if you look at the demonetization days, no, before that it was 0.5, what you said is correct. And from demonetization, afterwards actually gone to 0.8, 0.9 kind of thing. So 3-4 months of disturbance to them. And again, you know, the submitting culture was failed at that time. Some people are not able to repay. Then they come back and repaid. So some of them got sense that, okay, I can default and then come back to normalcy. So that's a small behavioral change actually led to 30-40 bips of changes. And the demonetization really made a little worse in the behavior. I need to admit that, because at this set of clients, if you say that, okay, 5 months of moratorium, basically what your loan officer is going and telling that 5 months you don't need to pay, correct? So that, you know, at that level of education, they understand that, okay, 5 months I don't need to pay. Then afterwards I'll pay, okay? So then some of them says, okay, they defaulted because of the, at least 20-25% of the customer segment got impacted because of the business nature, whatever the COVID impact definitely there. So their business losses, some of them actually got written off, some of them actually, okay, come back over a period of time. Then again, we went back and told that, okay, you can pay back and you will be a normal. Third, we said, we will also restructure. Regulator commented, you restructure the rules. So all of the industry restructure the rules. So now look at the customer mindset. The mindset, some of them might take the advantage of this. Even 5% of the customers takes the advantage. It will be 0.5% change the mix. That is why we say there's a positive potential increase of credit cost by 5%, 0.5%. So no, you can't say 100% of customers are perfect. You will see at least 5% bad apples there, right? If they take the advantage, there's a potential 0.5% change. That is why we guided 0.5% more than the pre-COVID level. Just thought that maybe.
But there are two more points which I will add to it. Micro things he has told. One is that if you look 5, 6, 7 years back, the loan sizes used to be very small and there were very few players and you would see 1 or 2 lender relationships. At that time, at a broader level, we could say that the micro environment at the client level is decoupled with macroeconomic trends. Whether India's economy, GDP slows down or fiscal deficit goes up or interest rate goes up, it is unaffected, very small loan, it is within their repaying capacity. As of now, you see that at an individual level, the leverage would have gone up to 80,000, 1 lakh or 1,20,000. Now we cannot say with certainty, and we are trying to work on correlation between that the micro is decoupled with macro. The macro trends also affect the micro, and that was proven in COVID and demonetization, and that is one aspect of credit cost, which has gone. Guidance a little inching up. And second aspect is, now in the last 2-3 years, we are also seeing the overlap of the sector, where other amorphous players, like digital lenders, some fake companies, chit funds and all that, also lending to that segment and leading to some problems area, which is again not internal to us, but an external situation factor. So in addition to what he said, these two factors also lead to maybe 0.3, 0.5% extra credit guidance.
I'm on record, I never said 0.5, 0.75. That is one. I have been saying this for last now 7, 8 years, 9 years. Fusion has been very clear. The credit cost in this kind of segment is around, because sector is growing. It's Nikhil, it's as the factors which were affecting the customers were too little. Now there are more, ticket size is more players. If earlier the JLG was which got disrupted very badly even during COVID and this thing, and so keeping all that in mind, I think you have to factor in some of these aspects. But I still believe that if you are calibrated and you're right, it's always a learning. You put more risk matrix, as some of the companies are doing. We are trying to automate our credit underwriting today. A lot of data triangulation. I can tell you, Nikhil, earlier there was no data triangulation which was happening in microfinance. Now you look at the data we look at. We look at customer behavior, huge data overall, we are looking at some of these trends, looking at geographies where there is a PAR, PIN code, blacklisting some of the PIN codes. So like it's an evolution thing, and and you're right. And every crisis, there's a learning, and people are incorporating those learnings and trying to strengthen their processes.
If allowed, can I ask one more question?
Yeah, last.
Yeah. So we have seen the evolution of microfinance in the past 15 years. So basically from 2010 to 14, it was South India. 14 to 18, it was East India. And from 18 to 23, we saw North India coming out in the picture. Going forward for the next 5 years, you guys have built the institution, you would be having your policies in place already. For next 5 years, which part of India do you think will come forward?
Yeah, there was skewedness. Earlier, if you see, as you're rightly saying, because, historically it started from South India, most of the companies started there. Very few players, I remember when I started, UP penetration was 1%. And there was some perception also about North India in terms of law and order and all that. That has now improved. So I think now I see everywhere. I mean, we cannot say that this. So there was a skewedness which has now gotten over. There is an equilibrium overall portfolio concentration is, which was because, and especially Nikhil, UP and Bihar, I mean, 30 to 35 crore of population, you can't leave it behind. So in that sense, in my view, I think every state is good, every state is bad. So you have to be calibrated, understand the risk, understand and do the work. There are white spaces in most of the states. In every state you will find that sometimes it looks like there's a huge concern has happened, but when you suddenly look at data, when you go in the field, you still find that still customers having one or two relationship is still very large. So in that sense, you always find some new places, especially rural India where we are focusing, we find a lot of, so I think there will be everywhere now.
I wanted to add to what Devesh said, we need to look at country as a market first, how this market is different than any other microfinance market in the world. First we have to see that. Is this able to grow comparatively others? We have very strong pillars like the regulation, which is not there in many countries. You have a bureau for even somebody borrowing 10,000 loan in the rural, his credit history getting built. It is not there in any country. You have a SRO, again, not there in any country. And you have a PSL funding ability. Every bank has been mandated to give up to 40% of their lending under PSL, and lending to microfinance is a PSL. And the regulatory and government support. The regulation allowing you to become bank, how many MFI become bank. You look at the facilitation by the regulation, the government and the policymakers, and it is you don't have this kind of facilitation across anywhere in the world. Okay? That's the first point. And then the efficiency, low cost of operation, low price, again, nowhere in the country. So therefore, one point is that whether it's a right place to build microfinance. That is point one. Second is the potential. Actually, basically the potential we're talking. Look at Bangla. Look at Bangla doesn't have a right regulation, right bureau, right SRO, nothing is there. Still, Bangla's portfolio is INR equivalent is 90,000 crores. 1,20,000 crores. He is actually adding, I missed it. So 1,20,000 crores. But at what population? May be equivalent to UP. So now look at the India as with this facilitation in place, strong governance, bureau, funding, everything in place, what could be India's portfolio? That should be the overall, I look from that point of view. And again, look from internally. Look Karnataka. Somebody can say Karnataka is penetrated. Karnataka is still not penetrated, I will tell you. But still, from a point of view, Karnataka's portfolio today is 38,000 crores. It is still lower as per me. And Bihar, exactly double of the population, double of the families. Whereas, population with less than 3 lakh income, maybe 80% in Bihar, maybe 70% in Karnataka. Now, what should be Bihar's portfolio? And what is today? So somebody raised Bihar portfolio, that's why I asked this question. So Bihar has a potential to become 1 lakh crores actually. Because of the pure population there, pure number of households there, and the revenue coming from external, because all of them earns and send back money there. Where is the where highest what you call online payment in microfinance happening? Because somebody else sitting somewhere in the country is paying for microfinance. Somebody borrows at home, somebody else pays for it. But the potential was, if you start looking at, this is what it emerges like the Rajasthan, Gujarat, and all these places are supposed to be much bigger than Karnataka, Tamil Nadu. So long we reach there, actually we are not realizing the full potential of microfinance in this country. Thank you.
I think we have addressed most of the investors' concerns which are there, and hope that investors are going to ride this growth rally that we are going to see in the microfinance sector. And hope, we'll see a lot of investments coming in from the investors over here. I would request, Nirav to basically, give a thanks to you all by way of a bouquet. And with that, we will end the session.